Hello, everyone. Welcome to the weekly roundup. Today, we will cover interest rates, some growing trends, and market sentiments. Hello, Ben.
Hey, Eva.
How's it going?
It's going good. Happy Thanksgiving if you're American.
Thank you on behalf of the
The
people in
Americans.
America.
First football game starting right now.
Oh, nice.
Yeah.
Well, it seemed like a quiet week this week.
Yeah.
Yeah, maybe
Yeah.
because of Thanksgiving.
Yeah, I mean, volumes tend to start to get pretty light by yesterday around lunchtime, and then short trading day tomorrow, and US markets close today. So
Okay.
much quieter.
Okay. We're starting off with some unemployment rates. This seems to have hit multi-year highs in the US and Canada. Do you think this could be the moment that pushes the central banks to change course on interest rates? What are we watching out for in the coming months?
Yeah, so I think you called it there. I think that's the big flag that we need to pay attention to. I think there's been obviously a tremendous amount of focus coming out of COVID around inflation, and every single meeting that they have is focused on inflation. But I'd say the last 6 months, that narrative started to change, certainly in Canada, and now more so in the US, where unemployment seems to be a bigger concern. And so you've seen quite a lot of big layoffs, and that's coming from generally a lot of it tech related. So we saw IBM with some big layoffs. We've seen some of the other tech companies with some big layoffs. And in our beautiful city here, we're starting to see some on in the Canadian side, the Canadian government, we're starting to see some layoffs there. So that's starting to have an impact. And so I think it drives a lot of what the central banks are going to do for the next little while.
Yeah. Speaking of tech,
Hmm.
there's been a lot of buzz in the AI sector lately. Some people argue that companies like Nvidia and Oracle might have peaked, and others are pointing to new winners that are
Hmm.
emerging. What's your take on this? Is there a shift going on there?
Yeah, so I think so. I think it's something to be very concerned and or cautious about. And one of the things that we've seen the big tech companies like Oracle is that these companies have been growing steadily, and now we've seen a little bit of games, I guess, with how their growth continues. I mean, Oracle's raised a ton of debt, so they have more leverage than they've ever had, and it seems like a little bit where Nvidia is selling to Oracle, who's buying from Microsoft, and it appears that not any money actually changed hands. So there's a lot of strange kind of dynamics happening in that space, and maybe you're going to start to see a shift away from some of the processors, GPUs, semiconductors, and maybe more a switch into, we'll say, maybe software and let's say pure like regenerative AI, those types of businesses doing a better job. I know ChatGPT's like integrating where you can buy directly through the prompts now, where you can click on buy links similar
Yeah.
to Amazon, we'll say. So maybe you get a shift there. The thing that I think is a bit different than like the 2009, 2000 tech mess was that all these businesses are making money. Could their revenues slow down? Are they overvalued? I think yes, certainly. But I think it's a bit of a different dynamic, and it may be shifting as opposed to completely popping.
Okay. So as we wrap up third quarter earnings season, were there any results or trends that surprised the markets? Anything investors should look out for?
So I think the government shutdown certainly muddied the overall big picture of the world. And
Yeah.
as a result, I think that flowed in a bit into the financials that we saw and the numbers come out. I think generally speaking, the consumer has been much more resilient than you'd think, at least in the US, that is. And so that's been a bit of a surprise. think we've seen some bottoming in some of the names. The we'll call them the value names. So you'd look at I mean, the food companies are trading at like 10 times earnings. Some of the consumer discretionary names like Nike and Under Armour and Lululemon, like these names are trading as low as they have in many, many years. So you're seeing some bottoming in some of I'd say, good quality names that are trading undervalued, where you will say the top of the index and the top of the market right now is looking maybe a little bit heavy. And so I'd be watching that, but yeah, that it's been a bit of we'll say a messy time because of the shutdowns and data is a bit confusing. So lots still to happen for companies prior to year end.
Okay. Let's see the charts.
Okay. So as you know, we were recording on Thursday. This is around 1 o'clock on Thursday. U.S. markets are closed, so things are quite quiet. But anything that happens between now and next week, we'll comment on next week. So lots going on still in the world. I thought this was an interesting chart just to talk about Canadian residential real estate, which we haven't done too much lately. I know probably a year and a half ago was the topic du jour. Everyone wanted to know about rates and where we're going and so on and so forth. But now we are kind of on the other side. Rates come down in Canada, and that's made home purchasing a little bit easier and refinancing a bit easier. So this was a good chart that shows mortgage activity has surged over the past year. And so there may be, if you looked at that in a vacuum, you would say that you would think that housing prices would be accelerating as well, but it's certainly not the case. So it's not a function of buying activity. It's mostly a function of refinancings of properties that would have been bought in 2020. So we're seeing massive amount of refinancings and rollovers and even some extending mortgages getting refis at higher levels. So interesting. If you look at this chart and only see that, you think things are booming in the Canadian housing market. Not the case. It's just more of a reflection based on what's going on with the refinancings of 5 years ago. So this is from our partners at Evercore ISI Company Survey Diffusion Index, just kind of a view on how companies are feeling right now in the US. And so this is a moving average, 8-week moving average. So I guess some of that data would be a bit messed up from the last month and a half of shutdown, but it's not looking super healthy. If you look across all of the company surveys in the US, you're starting to see a little bit of, I'd say, concern. And that is also plays into the start of our conversation was about how does the employment picture look in the US and continues to look a little bit slower and slower each year, or sorry, each day. The last one, which I think is quite interesting, is just sort of long tax loss selling. And so there's certainly lots of things to do as you get into year end, and we're going through tax losses now. And if you have questions or comments, certainly we had a few people reach out to us last week after. But please feel free. Right now, I'm reviewing gains and losses. Could we be doing anything, making changes? This is from our ETF team. ETF is exchange traded fund. And this is their team that reviews ETFs. And this is something that people would potentially be looking at doing as you get close to your end, as you're looking to harvest some of your losses. If you've had a good year of trading, you made some money, but you don't want to pay tax next year on it, you'd be looking through your portfolio and seeing if there's any losses. So what this chart is showing you, so this one on the left hand is the TSX, and the top line here would be communication services. So this would be in Canada, there'd be 5 stocks. 60% of those stocks have a year-to-date loss. So three of the five have losses. So some people potentially looking at, we'll say, selling your loss in TELUS, for example, and then you can go ahead and switch that into the telecom ETF, which gives you kind of exposure to that space, allows you to take your loss, you can go back in and buy Telus again in 30 days to have realized your loss, as an example. So this would be something that I think is worth considering. It's something that I do as well when I'm looking for tax switches. And then if you look over onto the right-hand side, this is the S&P 500. So obviously a lot more stocks in their indices. But if you look at consumer staples as an example, which I mentioned, so total stocks in there, 37, 24 of them with year-to-date losses, so 65% of the total. So you may look for that opportunity to, sell one of those that's down and buy something else that's similarly down to realize that loss. You can either do it in individual names. In this case, this gives you an option to switch it into an ETF that'll give you consumer staple exposure so that if we do get a recovery in the new year, you're not going to miss out on that by selling the stock and realizing the loss. So I think it's a great idea. It's something important to look at into year end. If you're not doing that or your advisor's not doing that, I think it's a missed opportunity from a tax planning perspective. And so I think this is something to think about and something we do as we get into year end. As always, the opinions expressed do not necessarily reflect those of National Bank Financial. Everyone's risk tolerance is a little bit different. If you do have any questions or conversations, please free to reach out to us, and we're happy to address those at any point.
Thank you, Ben.
You're welcome.
So what's on the agenda for next week?
So we get into a new month, of course, next week. So it'll be December 1st on Monday.
Christmas.
December 1st, yes, heading quickly towards Christmas. So that's exciting. Yeah, I think it'll be important to see just what's happening as one of the trends that we talked about going into the government shutdown was money supply. And now we're seeing a lot of, we'll say, uncertainty around that. And there's, money moving from the Treasury General account was supporting this. You're seeing a lot of money flowing back and forth. You're seeing, one of the places that hedge funds used to access for their leverage was to buy yen, hedge out the risk, and then put it into some kind of risk asset. But what we're seeing in Japan is they just announced a $1 trillion investment policy, so the rates have been going up. And so you're starting to see some of that liquidity in the system that has been here for 2 decades starting to trickle out a little bit. So we'd be looking at money supply quite closely as we get into year end. And tons of tax loss switch ideas. I know we've been talking about that, been spending the better part of a few weeks here going through, looking at names, seeing where there's some potential opportunities. So that's what the focus will be next week.
Great. Thank you, Ben.
Yeah, you're welcome.
Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of this video and in your email box. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you for listening and have a good weekend, everyone. Bye.
Thanks, everybody. Take care.